Anchor Capital is recently listed private-client asset management business, and it was founded by CEO Peter Armitage.
What a success story. So Peter, who's an ex-Investec guy and had done some entrepreneurial things as well, lists a new business off of a relatively low base and has used that entity to do a number of acquisitions in a very short space of time, gathering assets like crazy, and a real indication of how powerful the market can be as a tool if you know what you're doing with it.
Market cap, 1.4 billion rand, PE of 36.7, which is high, and a dividend yield of 1.1. We looked at a PE on PSG Consult of 31. You turned your nose up at that. How do you feel about 36?
It's a similar situation. Peter can grow the earnings quicker than PSG Consult because his cost base is just simply lower. You know, there's far less of an infrastructure you got to support. PSG is a big company and intense competition. Little asset managers like Peter's can do extremely well. So it doesn't worry me as much. What does worry me, I like companies with a long history. I just like history, and I know you miss out on some gems and you miss out on the initial growth phase, and I know Peter very well for many years, and I respect him. He's a very good asset manager, but I don't like companies with short history.
Is history a concern for you here, Paul?
Look, what he's doing is he's using the capital of the paper of the listed entity to buy businesses, the most recent of which was buying a business, Rob Cowan Investments, which was, been in existence for like 30 years, 3 billion rands worth of client assets, strong client relationships. So he buys the business using the equity and some cash, and then he gets earn-ins and buy-ins from those managers, and the whole thing rolls forward. So what he can report every time he reports results is a bigger and bigger and bigger business. Everyone gets more and more exciting.
Almost like the EOH model.
Indeed. The problem, of course, is that if you have a bad egg, if you buy something because you're in too much of a hurry and it turns out to be a bit of a lemon, or if you have a market that takes a bit of a downturn,
back up because we need to
then
talk
it could.
about it.
So I think it's a fabulous success story, but I think you just have to be aware. Yeah, that's some traveling. I think it came onto the market even at 1 rands a share, and here it is powering up in the region close to 10, 11, 12 rands a share.
All right, so are we calling this one hot or not?
I'll say wait, not hot.
Not hot?
I think that's the responsible thing to do, although that's what we've been saying since inception.
You guys have been waiting and lost a lot of ground here.
But, guys like Wayne and I have been around long enough to see this movie in both color and black and white, and I can tell you, when you have a listings boom going and you're doing well, that's all very well, but when it unwinds, it can unwind in a terrible mess.
Hot or not?
Not hot for me, no.